Hey everyone, welcome to the week review. The big earnings week is behind us and was kind of mixed. Obviously, mixed with a hint of bearish because we broke down, and many names broke down as well. Like we have a trend break here, and we are below all the relevant levels. Like for example, the Q3 levels, we closed below the quarter open, even though we tried to go higher. Also put the October levels and the September levels on this one. And this is true for all indexes, like QQQ close below the quarter level, IWM close below the quarter level, DIA close below the quarter level. So they are all they continue to be bearish in my opinion. And they will stop being bearish when we recapture this cluster of levels like quarter open, September, Q3 high, and October mid level. And we can definitely do it, but for now, I don't think that will happen. It's more likely that we attempt again and get rejected. How I see this going is like we make higher highs and eventually we break out. So if you see this happening and if we stay in this range, not get rejected by it, uh, bias change to bullish. And if we have a breakout here, it becomes fully bullish. But again, don't think this will happen. And let's talk about a bit the market's behavior in general. Like in an uptrend, it's not necessarily about going higher, but more like about not going lower. The fact that we do not go lower is what pushes us higher, and it's very healthy for the market to attempt to go lower. But the faster that gets bought up and the move down rejected, the more potential in the move higher. And in an uptrend, you will often see like in daily candles the attempt to go lower. Like for example here, we tried to go lower, got rejected. Tried to go lower, got rejected. Went lower a couple of days, then went higher, went higher. But there's often bottom week candles that show an attempt to go lower, but that gets bought up and we actually go higher afterwards. And it's reversed during a bearish phase. When we try to go, we obviously the trend is down, but then we attempt to go higher. Like for example, 3 down days or actually 2 down days, but attempted to go higher, rejected, went lower. Attempt to go higher, rejected, went lower. Even this one, it attempted to go higher and got lower. And this one, change of character. We went super low and then got rejected. And after this, we attempted to go lower, got rejected. Attempted to go lower, got rejected. Attempted to go lower, rejected. And eventually, the pressure pushed us higher. Like we eventually stopped going lower and started going higher. And we can see this in the current behavior, meaning that we have a lot of top week candles. We topped out here and then went lower, got bought up a bit, but then when we go higher, every time the candle turns red, got rejected, rejected. Even this one got rejected a bit, rejected again, went lower, and now we try to go higher and got rejected. So the market is saying that something has changed and we are in a downtrend. Uh, as long as we see continued rejection, we will go lower eventually. What would be another signal of the changing character is getting something like this, like we go lower, but then it gets bought up. We go lower, it gets bought up. We go lower, it gets bought up. So this is what we should be looking to see if we make a bottom. For now, it's not the case. Like we have a big rejection candle, uh, and then another one after it, and this in theory will lead to continuation down. And we have a couple of levels to look out for. Uh, First one will be the October low, like 565-ish. Then September mid at 557, and eventually like 440 for the October mid. In theory, we have the potential for an engulfing candle on the quarterly. Yeah, 3 months. Uh, and the two levels that are of interest to us, all September, October, bye-bye, is the mid and the low. So in theory, we should be dropping until the mid level uh, and bouncing here. I think this is the most likely outcome. But if we do not bounce here, we should be going down to 510 and making an engulfing candle. Uh, we shall see if that happens. I would be happy with 557, and we reassess at that point, depending on what the market what the market behaves like and what's happening in real life. Because next week, U.S. elections, and my theory is that it's gonna get funky very quickly. If Kamala wins, Trump will obviously not accept it and make a big fuss. If Trump wins, I think the Democrats will make a big fuss this time as well. It will be contested almost 100%. I don't expect like to get. I mean, we will get results the next day, but the party will not be over. And aside from this, we have VIX making higher lows here. Yeah, higher lows, and almost making a higher high at the moment and making a breakout. This is a build up. This is a potentially big breakout. And historically, when VIX stays in this like above 20, the last time it did this in a consistent way was the pre-28 crash. And I'm not saying that we're gonna crash, but when this kind of thing happens, it's usually we have multiple spikes. Like it's not just a single spike and it's gone. This was like one, two, three, four, five. This was the sixth spike in a sequence. And we are barely at, I don't know, let's say the second. Yeah, we are at the second. We had this big one, which I don't think we will surpass because it went pretty crazy at that point. Maybe we do because lots of leverage in the system and we it would go crazy. Like if we drop back and do an engulfing quarter, I think we have the potential to go over this. But even this, like a lower high here, going to 50 or something like this, would be plausible. Not looking to see this, but I'm looking to at least take out 30, ideally 40, and then we can go lower. And the positioning for VIX, first of all, there was a lot of volume on 14 puts and 13 puts for after the election, like on the expiration on the 20th. This one is of note because it exceeded OI by 200%, so it 2x the OI on the volume. So this is what I expect. So what I expect is a spike up to make all the hedging print and give anyone who was long the opportunity to get the fuck out of the long VIX trade. And then when we peak out on this and the market bottoms, we will get a huge VIX crush, and I would expect we actually close with those puts in the money, like all the 13s and 14s will close in the money, and that will be the next bottom post election, like somewhere around here. Maybe we go even lower depending on what happens after, because I would expect uh, that puts will be loaded up on VIX when we get this spike. So for now, everything is aligned towards continuation down. We have real life events that will certainly cause volatility. The surprising thing on Friday was the TLT, the yields rejection. Like I got this one completely wrong and didn't see it coming at all. Like the 2-year had a huge candle. At some point when the news came in, it was minus 2.5%, something like this, and it closed like it was a 438 swing, closed up 9.91 at the end of the day. But I'm not that concerned about this. The play still remains. I even bought a few more contracts on that close yesterday of March 95C, I think. 10-year is the benchmark here, and we hit the trend line. I think it's plausible to get the last shove above and make a small fake out here into the election, and then I think we will get a turn. This is consistent with other turning points like usually yields top at the end of the month, like this top here, end of October, this bottom here, end of January, sorry, the end of December, this top here, uh, end of April. So this one, September bottom, end of October as well. So it's pretty common for yields to top out at the end of the month, and I still think they will do so. I'm going in super big relative to portfolio size, like 30-40%. I'm going to, if we hit 90 and we go even higher here, this will be long dated. Like my approach to risk management is the bigger percentage of the portfolio you put into a trade, the longer dated this has to be. Like if you go 0 DT, you can put like max 1%. But if you go like 100% port, you should do like at least LIPS, meaning one year out at a minimum, but ideally even more. Problem with that is that some names are not liquid to do that, like you lose a lot of the spread. But things like TLT, like SPY, are super liquid, so you can do that on them without losing too much on spread. But yeah, that's kind of the idea. So it will be long dated, and that's the approach. I still believe 90 will be a bottom on yields. Even if it's not a bottom, the fact that economic data came in yesterday, jobs data came in really bad, like NFP, 12K, expected 180K, and private payrolls expected 160K minus 28K. The only reason it came in positive was because government payroll came in double what was expected. So this should have been negative unless the government spent. There was a lot of hiring related to the election, so this will go away relatively soon as well. It's not looking good for the jobs market. Remember, for a couple of months back, maybe 1-2 months, that thing about the revision for the payrolls and the birth date birth debt model in which they used to estimate NFP. And now that that will get adjusted, NFP will miss every single fucking time for a while, and even that will get revised down even if it misses. So NFP up, unemployment came in flat, but in reality it was a zero point 0.9 increase, no, 0.09 increase. The last month's print was 4.05, and this month's print is 4.14. And what shows here is averaged up down. So we actually got an increase in unemployment. This should also become more visible and increase over time. There is no way yields remain this high. After the election, maybe spending tones down a bit as well, depending on who wins, or it doesn't matter who wins. Like the deficit is going to be a huge problem, so they have to tone it down as well, and most likely will do so after the election. So I think TLT along here is a very good play. Just have to give it a bit of time for it to play out. Uh, Also saw, like I keep seeing, no, there was a dark print. Actually, that's TLT. There was a dark pool print at 91.48. We are below it, but doesn't really matter. Basically, this very high chance this was a buy because we are at the bottom. Then volume-wise, quite a decent chunk of 100C and 95C short dated. So this would mean a top very quickly and a strong reversal after this. The spike here, in my theory, is it has to do more with some end of month rebalancing flow, something like this, and not with the economic data, because it's highly unusual for this to happen. And I'm not even saying because long-term yields. Let's Until now, long-term yields have gone up and short-term yields have gone down. What is very strange about this one is not that we had the move up, it's because it was across the board. I would have expected the 2 year, if the long term, like 10-year plus, would have gone up and the 2 year was like flat or negative, that would have made sense because the market is discounting short term rates because bad economic data, and saying long-term yields have to be higher because deficit spending and government recklessly spending. So this would have make sense, but the fact that they went up across the board is the highly unusual part, and why I think it's more related to end of month flows than anything else. Now, finally, let's talk a bit about oil. Where is oil? And let's look at the quarterly rejection, monthly rejection, weekly, uh, doesn't matter. My theory is still that uh, all that is holding this up is the threat of war. If that doesn't materialize, then oil should be going to 60. And that's what I want to see as well. So it spiked back up because Iran threatening is going to attack Israel before the US election. If that turns out to be a dud as well, like not really escalating that much, and I think it's likely that will happen. Another show of I don't know, puppeteering basically, not puppeteering. Like it's just for the show of it. I think oil dumps again, and if it makes a new low, this is going to 60. If it doesn't make a new low, then this is likely bullish. Like if it goes only here and starts doing this, then there is a build up for a bigger breakout later on. So low going to 60, the new low. No new low, like if it stays here in this area of like let's call it 65. So if it doesn't go below 65, the point I make earlier about attempts to go lower getting rejected becomes valid. So in that case, then we are looking at some oil staying relatively strong in spite of all the negative press and all the attempts to push it lower. So if it's not going lower, then it is going higher. This is the way I think about it. If we make new lows, then 60. If we don't make new lows, this is a build up for a bigger breakout later on. I still think from a seasonal perspective, oil bottoms around end of January. So I don't think this is going to be an imminent move, more like a bit more chop here in this area. And once we get towards late December, I think it's going to be set up for a move higher. Okay, yeah, let's look at mega caps a bit as well. And I'll look at the monthly charts because we just closed the monthly. Tesla looks okay. Apple rejected. We are now below that dark pool print I talked about last week. This is undecided. Undecided with the bearish bias. Basically, the last candle has the bias. Like here, got rejected from a move higher. Okay, then we went lower. Then it was bearish. Then got rejected from a move lower. Another consolidation inside month, and then we went higher because double bias from a move lower. Now we have a bias from a move higher. So we should be going lower, and then if we get rejected again from the move lower, it's likely that it will break out and move higher. Actually one last thing about this. Uh, we had ASML with that miss a couple of weeks back that had the potential to end the AI bubble. And this week we had SMCY with that news about Ernst and Young refusing to do their audits because funky shit. Another canary here. Uh, they have earnings on the on Tuesday on the 5th. Okay, earnings on the 5th. Let's see what they say on their earnings. Can they file their 10K or whatnot? So first news was ASML. Second news is SMCY, which is one of Nvidia's biggest customers. So if SMCY does funky shit, what does that tell us about Nvidia? Uh, But yeah, anyway, back to the monthly. Google. Google, the interesting thing about this one is like it faded the entire earnings move. Might bounce here. Let's look at the lower time frame. Not that encouraging. Spiked up, got rejected. Not the best of looks. I would say it's looking more bearish than bullish. Amazon, the 200 wall. This is going to be obviously right now it's bullish because just had earnings and they were positive. But how this candle proceeds will set the tone. We have one, two, three, four rejections at this level. So I would say that this is also bearish, and it depends if this candle negates this. This is good, but this candle can also go all the way here or even lower, and that would confirm the bearishness as well. It would be the third rejection in a row, and that's usually when things break down. So if this candle, if this actually closes red, I would expect Amazon to go lower. That looks okay, like a single thing. This is unlikely to be the top for Meta. Like even if it goes down, it would be something like this, and eventually like this. Some looks pretty ugly. Also got rejected on earnings and made a very ugly candle, engulfing big one. On the wall at 118, this is an ugly rejection candle, and this is a continuation candle. In theory, we have a target of 107. Like this, when we took out the lows of this candle, it's an impulsive move that made new lows. So now we should go down all the way to 107 at a minimum. If it's not 107, then it is, or that's the first target, second target, and then third target, fourth target. For now, just 107. We'll see if it goes even lower. And Netflix with that pennant, quite undecided. With the market assuming to be bearish, I would think this would break down as well. The last rejection is the one that matters. Like here, we got rejected from a move down, we went up, now we got rejected from a move up. So now we should be going lower. If that gets rejected, then we should be going higher and so on. Okay, that's it. Have a good one. Bye bye.